We are here at MJG Studios for the latest installment of the Community Pulse, where we take the pulse of community so we can take action. Welcome to PCS's MJG Studios. This is the Community Pulse.
Welcome to the Community Pulse, where we take the pulse of the community so that we can take action. I'm today's host, Courtney Smith, and I'm here with Stephanie Kendricks. Stephanie is VP and Branch Manager at Trust and manages the Markham location, which is Markham Bank Trust. Welcome, Stephanie.
Good morning.
Good morning. How are you?
I am well, and thank you guys so much for having me.
Yes, thank you for being here. Now, today we're going to be discussing how to budget on an entry-level position.
Ooh.
And I know, it feels like in this economy, everybody is entry-level.
Exactly.
So, for someone just starting out in an entry-level position, how do they figure out, like, what a realistic budget looks like?
I would say, to be honest, look at what is your overhead. It's kind of like running a business. What does it cost you to live? And that can also help you with what job you can afford to take. So if you don't currently have household expenses, then you can take an entry-level position and then kind of budget off of that. But if you're starting a job and you already have a certain amount of overhead, you have to factor that in before you even accept the role, because you're going to start out in the red if you know that that's something you're not going to be able to afford. To be realistic about it.
Okay, I like how you said approaching it as a business and looking at your overhead, because if I have a car and I'm in an apartment and I get a job, I need a job that can pay for my car and apartment. Okay, all right, and so rent, transportation, food, all that overhead, they're considered the essentials. And they add up fast. How should an entry-level earner prioritize which bills come first when money is tight?
So when money is tight, you're going to always factor in a place to stay. And secondary would be transportation, because if you do not get back and forth to the job, you're not going to generate more income. So those are going to be the top priorities. You want to have a place to stay, and you also want to make sure that you have funds that are going to allow you to get to and from work to continue to make money. Then everything else would fall, under those two.
Okay. And what budgeting method do you recommend for beginners? I think I saw something about like a 50, 30, 20. I don't know nothing about that. So can you break down what that means?
So your expenses should not be more than 60% of your income, because you should technically be saving 30%. So if your expenses is 60% and you're saving 30%, you've got another 10% to kind of just a little bit of a wiggle room.
Okay.
And when I say 60%, that would include groceries, things that are uncontrollable, So that 10% could be there for leisure. We talked about hair, those little bonus things that you like. And if you are able to save that 30%, that'll help you to be those times of need, or when things come up, as they always do.
Okay. Now, I hear you, and that sounds amazing. But we're talking about
today,
the year of our Lord,
2026.
How realistic is that?
It's not.
Okay.
And even from my perspective, because, the saying is, the more you make, the more you spend. And now you don't even have to spend it. It just comes out naturally. Now everyone has a cell phone. The average cell phone bill per person is about $130 to $150 a month. So you take that in consideration. Those are things that are, you can't really go without. Then there's the cost of groceries. Groceries has taken over a good 40% of my income, just looking at the increase in the prices for things. So whereas you might have been spending 5 years ago, you could have been spending $200 a month in groceries, you're easily spending $500 a month in groceries now because of the increase in everything.
Yeah.
Just simple necessities, not any luxuries.
Yeah, no, life is
We're not talking eating crab's legs every day.
No.
We're talking milk, bread, eggs.
Exactly. So with that, years ago, it used to be that families lived together. I've been fortunate enough. I mean, I've always, except for college, I've lived with my mother, and it works. Like when we look at financially, like, okay, kudos to my mother for establishing some type of generational wealth, because the house will go to me. It's almost paid off. Like, we just did major renovations. Like, so, but not everyone is in that situation.
No.
Do you recommend that people try to live together as a family, as opposed to, back when you and I were in college, a lot of our peers graduated and bought condos, bought houses, had cars. Like, that was instant, but that just...
Immediately. If I could turn back the hands of time, I would definitely have not done that. I purchased my home when I was 29.
Okay.
Which is early.
Yeah.
To be honest,
Yes.
that's early. And again, I'm a Gen X, so that's kind of like the path that we were just on. But being in banking for 30 years, I've seen a lot of how people utilize their finances. And culturally, our culture is one of the smallest cultures that do community living. Most other cultures, 100% are going to live in community type housing. And I've seen it where it works. It works where you've got 4 families living in one multifamily home, everyone's contributing, and then you take that, you pull that money and you purchase another multifamily home. And you do the same thing and you're creating this wealth while at the same time helping everyone.
Okay.
So someone who has the entry level job that's a part of that little family cohort, they're going to be able to manage. And you're right, this day and age, another thing I'm seeing is just community living in general. There's a lot of houses that are renting rooms, and people are renting rooms for a less amount to be able to have a place to stay and still survive.
Yeah.
And that was a thing of maybe like the 60s.
Yeah, I remember
definitely
my mother growing
in
up.
Bronzeville area. I grew up in the Bronzeville
Yeah.
area, so definitely in the Bronzeville area, there was like 2 flats where there were probably 5-6 families living in that one unit, and it worked.
Yeah,
it worked, and I think that we're probably getting a lot back to that. And not to kind of go left, but the Generation Z, the younger audience now. And they don't want to purchase homes. They are not looking to get tied into a 30-year mortgage.
but can you blame them?
Absolutely not.
What home ownership looked like for our parents, for you, is very different, because the housing market, it's crazy.
Yeah, yes, it is.
The prices, I'm like, who can afford this realistically?
No, I have no idea. And even like you said, the common housing market, I worked on I worked on the Gold Coast for many years. And I remember when condos would go up and they would say like, oh, well, this condo is going for $1.5 million. And I'm like, who's doing that? Who can do that? And so even now with the housing market, even if you can afford the house, you have to be very mindful of what community it's in and where that tax bracket falls. Because it could be a $200,000 house, but it be in a community that the taxes are $11,000 a year. And that could easily land you in foreclosure because you didn't prepare for the tax increase, or just having that additional $11,000 a year is almost an extra $1,000 a month added on to the mortgage.
Yeah, that's a lot. And I think, like you said, with the taxes, people don't realize if property taxes go up, your mortgage is going to go up. Yeah. Yep.
And even we had a storm last night. Every time there's a storm, a huge storm, or there's things where there can be insurance claims, you can look forward to the insurance companies putting a hike as well. In the last 3 years, there was probably about a 30 to 40% hike in insurance premiums.
And that's crazy when you think that the salaries are not increasing
by 30 to 40%.
Right. It would be great if they were, but that's not the case.
They're not. And to circle back to our original question is, can you make it on that? You really, it is very difficult. It is very difficult and even if you do get a salary increase, the chances are it's 3 to 4%, which is assumed to be cost of living, and that does not equal 2026 cost of living.
Yeah.
The price of groceries went up more than 3 to 4%. So, and if taxes are going up 3 to 4%, gas has gone up 10 to 15%. How are you stretching this? How are you stretching these funds? So that would be community living would definitely be a great avenue. Unfortunately, multiple jobs. A lot of people are taking on part-time jobs. We've got things like, there's so many people I know who have nice careers or make a decent living. They're doing DoorDash, they're doing Uber Eats, they're doing all these things in addition to just to make ends meet.
So definitely multiple streams
of income.
Okay.
Community living, multiple streams of income is going to be two ways, like two of the bigger ways that would help make a significant difference.
Yeah. Okay. Can you think of anything else that anyone can do? A lot of entrepreneurship too. Okay. And how can banks help with that?
So we definitely foster small businesses, entrepreneurial relationships. We offer one of the only business accounts that I've ever seen that has no minimum balance required.
Okay.
So if you're a small mom and pop, you're a baker, you bake for a living, you sell this, or you're a photographer. You can possibly have your bank account, but you're not generating enough money to maybe sustain $2,000 to $3,000 in that account, which sometimes can be the minimum at some bigger banks. And with this account, there is no minimum. We are very conscious to the small business owner.
Okay.
Yeah, very, very conscious to that.
Okay. And so let's say I'm doing the community living and I'm pretty good about having multiple streams of income, at least maybe two. How do I budget for personal goals? Like even in all of that, like saving for a vacation, a car, moving into my own place, maybe once I figure out, okay, I've done good with the community living, like, should I even try to set goals like that? Or in this economy, is it like, okay, let's shift those goals so that maybe they look a little different?
Well, 100% we should have goals. We should always have something that we're looking forward to. I would definitely be saving.
Okay.
And one of the saving methods I like to use is saving with 3 buckets. There's a short term, long term, and then a rainy day. The short term is something that you're trying to attain within a small amount of time. Could be 6 months, could be a year. The long term could be purchasing a home. So that maybe you'll give yourself a 5-year window or 3-year window for something like that, or purchasing a new car or paying for college. And then there's the rainy day. Things happen, auto repairs, health issues. And so if you're using your 30% that you're saving and you're putting that in those 3 buckets, my breakdown for it is you're going to put the smallest amount in the rainy day because you're going to use it the least. So even though you're putting the smallest amount in there, it's accumulating the most because it's hardly being touched. The long term, you're going to put a little more in there, but because that's going to be a bigger goal. The short term, you will put the most money there because you're trying to attain something sooner. I do this with kids, anyone, elders or adults that just are saving. Let's just say if you're saving from each paycheck is $50. Mm-hmm. I would probably put $10 in the rainy day, maybe $15 in the long term, and then the additional $25 into the short term.
Okay.
So you're putting more into the short term, but you're trying to attain something quicker.
Okay.
And you're also spreading that money out because how disciplined are we if we only have one savings account?
We're not very disciplined.
Especially in today's society where everything is digital.
Yes.
All banks offer a mobile app. We all have access to our funds, everything in the palm of our hands. And so having your checking and your savings account in the palm of your hands, you can easily just, oh, those shoes are on sale, I must have them. And so you just like, I'm just going to transfer it. Just transfer it from my savings. I'll put it back when I get paid again. And then it's a cycle.
Yes.
And then before you know it, that savings is not looking like what it's supposed to look like. So how disciplined am I?
Yeah.
How disciplined am I is going to determine how I save.
Okay.
Am I able to save in a savings account that is connected to my checking account? Am I that disciplined? Or a lot of people like to say, well, I'm saving at a credit union, because credit unions aren't as easily accessible. Mm-hmm. They're usually far and in between available where you can go to get them. So they're like, well, I can't get to the money,
okay.
So that'll for those people who aren't as disciplined, putting it far out of reach, not having it digitally accessible.
Okay.
So maybe saving physically cash at home.
Okay.
Just in a class last week, one of the gentlemen stated that every time he gets paid, he purchases 2 rolls of quarters.
Okay.
And so he purchases 2 rolls of quarters, he breaks that down and just puts it in a bucket. How likely are you
right.
to scoop those coins out and go purchase the shoes?
You can't purchase online.
Exactly. So
yes.
that's an old school method, but it would work.
Okay.
It's all about how disciplined am I when it comes to saving.
Okay.
So.
Okay. I like that. That's a good takeaway. I'm making mental notes like, okay. The audience wasn't privy to this wonderful conversation we had before we started taping about life insurance policies. How can someone on an entry-level position use that as, I don't want to say like cushion, but like foundation or something?
Capital. It's capital. It is capital. It is, again, I use how we operate in our personal lives as a business.
Okay.
Maybe because I work in a bank and I see it on both levels, but it is capital.
Okay. Can you explain to the
So
audience
capital meaning this is money that you have secured. It's there.
Okay.
It's there for you if you need it. You
and
know
how? Because I think a lot of people think, oh, life insurance policy, that's what gets paid out when
someone dies.
Explain like, what makes it capital? Is it the term life, whole life? Like, what makes that capital?
So I'll use myself as an example. Early on, I had to be really young, but I remember taking out, I already had universal life insurance policies in the event something would happen to me or, my spouse at the time. Then I wanted to make sure. And not that everyone has this information. I unfortunately lost my siblings at an early age and lost my mom. So I know what it takes when something like that happens. And so I decided, okay, well, I have this insurance already, but now I need to figure out something else. You can't just have, one bucket.
Right. And
so I looked into terms where you pay for a limited amount of time. And so I took out these 15-year pay policies. You pay premiums for 15 years. The premiums might be a little more, but you're paying it only for 15 years. And I love stuff like that has an end date.
Right.
I want a bill that has an end date.
Yes.
And so in those 15 years, this interest is accruing as well. And it's adding cash value. So that cash value is basically having a savings account that you don't have access to unless you tap into it. And you have to kind of go through your insurance agent to say, hey, you get a statement every month. It tells you how much cash is accumulating. And so then when life or whatever you were actually having it set aside for comes about, you can just call and say, hey, I'd like to borrow from my own policy because that's money is for me. And you're borrowing it. 2 reasons. 1, you don't want to pay taxes.
Right. Yes.
If you borrow it,
yes, you do
that
not.
means I'm paying it back, and that kind of exempts you from the whole taxes thing. But 2, if you're going to borrow money, borrow it from yourself.
Yeah.
Borrow from yourself. And so my intention was set up these policies to pay for my daughter to go to college. And so I took out the policies when she was 7.
Okay.
So I knew technically they were 15-year pays, but I really only had 11 years until she was going to be in college. So the cash was accumulating. So her freshman year came, and when the tuition was due, there was only a set amount that was available. But again, I had taken out multiple policies.
Okay.
Because I knew for each year.
Your different buckets.
Different buckets. And so freshman year came, and then they told me what the balance was, and I called my agent and I said, well, let me know what's available. And I took from the policy that had the amount available I needed. And you can, because you're borrowing from yourself, you're the lender. You determine how much you're going to pay back over what amount of time. And so I, of course, picked the smallest amount that I could because, again, how can I budget this?
Right.
I don't want to not be able to pay this money back. So I'm not going to tell them that if I know I already can't, I don't have a huge budget, I'm not going to say I'm going to make $200 a month payments because that's not,
it's not realistic. Yeah.
And so I was like, what is the minimum amount you can pay? So it's $20. Okay, sure, great.
We can handle that.
Great, we can do that. That's a trip to Chipotle.
That's the car money.
Yeah.
the stashed in the car in the case. Yes.
The coins.
Yes.
And so I'm like, okay, we can pay that. You want to make it where it's affordable for yourself. With anything, with any loan, you always want to make sure it's affordable for yourself.
Okay.
A big one is cars.
Yes.
A big one is cars. We talk about this at a lot of our Money Smart sessions and things like that. People, you have a need, and you're like, I just want to fill the need. Let's say you have a job. You're like, I got this new job coming up. I got to have a car. I don't care what. You'd be amazed at how many people purchase a car, and when you ask them, what's your interest rate, they have no idea. Oh, I don't know.
And that'll make or break your car,
everything,
your notes, how fast it gets paid off,
what you're actually paying.
Yeah.
If something happens, if you're in an accident, if the car is totaled, how do you recover from that? Because if that interest rate is really high, there's a huge chance that if something was to happen before that car is paid off, you're going to be upside down in payments because now you owe way more than that car is worth. And that's what the whole upside down means. I like to always say what stuff is because you think everyone doesn't know everything.
That's true. I mean, it's a lot of information and I feel like, and I'm always going to go back to like when we were growing up.
Yeah.
We didn't, cell phones were not the thing. So if you wanted information, you had to physically go to the library or pick up a magazine that was specific to that topic. Now, the information is on this little tiny computer that we hold in our hand, so it's overwhelming. To figure out, okay, the car and this and that, and then I'm on Instagram and this person on TikTok said this.
And everybody said, get a trust.
Yes. That's for another episode.
I know.
I had the same conversation with my niece. Now, for a while, everyone was on, and I feel like they still are, get a trust, get a trust. I used to work for an attorney that did estate planning. So I love, Mr. Tennant was the best. He did my mother's estate planning. So she goes in like, yeah, maybe I need to get a trust. He was like,
why?
You have one child.
Yeah, for what?
He was like, let's do a transfer on death. And he was like.
So I work in a bank. I work with people who many times the client has passed away or the family is getting POAs and things like that, and they're wanting to establish trust. And I'm not going to act like I knew about it forever,
right.
But my aunt was like 93, and I remember she was one of the first people that I witnessed purchase a home. I was a little girl. I know that was a good
feeling.
What?
Yes.
And she purchased this home on the west side of Chicago, like right at her retirement. I thought this was the most grand house ever. But she had a transferable upon death on her house.
Okay.
That document supersedes anything.
Yes.
So there is no overturning it. No will overturn it or anything because it is transferable upon death. The only people who can change it is the original signers. And so you don't need a trust. You don't need a will. If you have a transfer upon death, it literally just goes. That's it.
Yeah.
This is who it's going to.
Yep.
I mean, people, power of attorneys are very important.
Yes.
I've seen a lot of situations where people get sick.
Yes.
And they no longer can handle their affairs, and it should be in place. But upon death, it no longer is valid. So you still need something else in place. And again, that could be a whole nother episode as far as just having your business in order.
Yes.
Having beneficiaries on the account.
Yes, on all your accounts. Because even, and I would go so far as to say, because like for a long time, my mother and I bank at the same bank, but I was not on her accounts. And so for me to tell my mother, okay, put me on your account, she's like, you trying to take my money. But then our life insurance agent, Shirley Ann, love her to death, was like, put her on there. She said, because if something happens, you want her to be able to just get to the money and be able to. And so she agreed. She was like, oh, now it makes sense. I'm like, of course, when somebody else says it, it makes all the sense in the world. But it just, because people don't understand, even if you are a beneficiary, you still have to get the death certificate. Like, you have to go through. And by me being the only child, like, I know when my mother passes, that's on me. So it was like, okay, how can we streamline this to make it as easy for essentially me? Because my mother be gone off to glory. But it's like, people just don't, we just don't think about it.
We don't think about it. I always advise my clients, as I see them transitioning to a different stage in life. I will recommend, I noticed, like I might have a client who fell ill, hadn't seen them in 6 to 8 months, and then they resurface and they're like, yeah, I have been in the hospital and this and that. And I was like, oh, okay, well, now it's maybe time for us to talk about transitioning your daughter from beneficiary to maybe joint. Because beneficiary, you don't access anything. You can't do anything on their behalf. It's only upon death.
Yeah.
And so having a joint, they can handle your bills. They can make decisions that need to be made. They can go in and out of the financial institution if they need to. Whereas life doesn't always give us a long period or a warning.
Yeah.
Sometimes things just happen. And now you're in a situation where mom or dad has all these funds. Nobody has access to them. Even something as simple as funeral services. You don't have access to the funds, you can't, operate it. And I mean, I love these kind of talks because it's so much and every conversation triggers something else. But insurance policies, I've seen this as well. Today, insurance policies, it is probably going to take 14 to 21 days for the insurance policy to pay out.
Yeah.
So you're not going to just have access to whatever that policy says. And because funeral homes have been burned, they no longer just take, oh, I have a policy. No, we need to wait. We need to make sure. And so a lot of times now you'll see if someone passes away, the service won't be for about 2 weeks.
Yes. And I'm glad you're saying something, because when you look at other cultures, like, okay, if you're Jewish, you got like 3 days. Right. Like, and so with us, it just extends and it extends. And I'm like, why is there always this 2 week?
And that I've seen that come in the last few years.
Okay.
I do remember, again, having experienced lots of family deaths. Typically, our culture, the funeral would be within a week.
Yeah.
In a week. And to be old school, it was basically so family who were traveling could come.
Yes.
And most times the family was driving.
Yes.
So you would make it a week stretch out so that whoever was coming could get here. That is not the case now. The case is that the money has to be there, and the funeral homes want to know that the policy is valid, and all the I's have to be dotted and the T's have to be crossed, and that's just how it works. Because money, you just have to make sure that sometimes people have insurance policies and they've been paying on them, or something happened and they didn't even realize that, oh, my term ended. Because, when we talk about that again, that's something else, but somebody could outlive their insurance. And you're thinking like, oh, well, I know my mom had this, and then something happens to her, and you go and, you start making calls, and now you find out that policy is not valid anymore.
Yeah.
So even for that, like, that is a part of that rainy day savings, because it could be something to that tune, or you can make the decision. And like you said, other cultures might possibly have things in place where they're willing to pay the cash and deal with, a lot of people will put a funeral service on a credit card and they know they're going to pay the card off when the policy clears. But it's all money. It's all preparing. We should all be preparing for something.
Okay. Even on that entry level.
Even on that entry level job, like we were coming to, on an entry level job, if you are an adult, especially if you have children, you should be budgeting in life insurance.
Okay.
And you should be budgeting in independent life insurance, because yes, most jobs provide you with life insurance policies. It's connected to the benefits. But what if you lose that job? Then what?
Yeah.
What if you work at a job for 25 years and now you're 57 and you lose that job and now you're 57 years old trying to secure life insurance?
Which is going to be super expensive, especially if you have health issues. Like, yes.
So always try to stay a little proactive when it comes to, I know, play on the words, but try and stay proactive when it comes to things like that. I'm always a stickler for that. My sister loves to say, I have insurance through my job. And I'm like,
you're like, that's not right.
Yeah. So
you're like, I'm the banking person.
And it's funny that you say that, because I've been in banking for 30 years and I never really talked a lot about what I do amongst my friends and family. They all knew I worked at the bank. I don't know if they knew exactly what I did, or
Not them going around telling people, oh, she's
working at the bank. Right. I don't know. She's worked at the bank. And so, because I've done everything. I've worked back office. I've worked frontline. I've worked customer service. I've done all of it. And so, I don't know what they thought I did. And so now, being in a community like Markham, being amongst an underserved community where financial literacy is not guaranteed, it is definitely a privilege. And so that everyone is not offered. And so being in this community, being in this place right now is making me way more intentional about sharing information and letting people know where I work and what I do and what the interest rates are and how you should be moving and things to look for with a mortgage. I don't know. I just never said anything. And then, it hits you and you're like, if one of my friends is buying a house, I want them to consult with me.
As they should.
If someone that I know it has come into some money, or they're looking for avenues for savings, I would like for them to reach out to me, because this is what I do for a living. I'm sharing this knowledge with everyone else. Why would I not share it with my home base? So I always knew people talk about CDs, and you just felt like, oh, well, CDs are obviously for people that are rich. No, they're not. The minimum for a CD is $1,000.
Really?
Yes.
Okay.
Exactly. It is such a stereotype that, you have to have millions. No, you don't.
When you say CD, can you explain to the audience what that is?
So a CD is a certificate of deposit.
Okay.
So this is another great way to save if you are not very disciplined. Okay. Because the CD has a fixed rate. Okay. And it is for a term. Meaning it is not liquid. Once you put the money into the CD, it's there. And it's an investment, but it's guaranteed. Okay. There's no chances of you losing anything. The rate that you get when you open the CD is the rate that you're going to have until the term ends. But the term is how long the money is locked away for.
So you can't touch it.
You can't touch it.
Okay.
Technically. There's always a loophole. You
get a tax penalty though, right?
Exactly. Okay. You can not only get a tax penalty, you can get a premature closure penalty. So the amount of money you thought you were going to earn in interest, now you lose some of that. Okay. And that's the whole point of having the CD. Okay. So my conversation is typically when someone is having, I see a larger balance. Hey, Courtney, do you see yourself having a need for this money within the next 8 to 10 months.
Okay.
And if you're like, no, I don't have anything going on, I'm not going to touch it. I think that we can get you into a CD with a higher rate, because CDs are going to be at a higher rate.
Okay.
This is money that is guaranteed on the bank, and that allows the banks to lend from those funds. Because we know we're holding it for a certain amount of time.
Okay.
Now we can lend off of it.
And with a CD, how much is someone looking to pay per month?
Nothing. So the CD is based on what you have. Let's just say you have a savings account that's been sitting for 2 years and you got $25,000 in there. And the average savings rate is between 2 and 2.3% right now. And so you're getting that, and I can say, well, Courtney, I can offer you an 8-month CD paying 4.5%.
Okay.
For 8 months.
Okay.
And so in 8 months, we'll take that $20,000. We'll give you interest. It'll accrue over the 8 months.
Okay.
And now
I feel like people don't know this.
No, they don't know it. Everybody doesn't know it, but there's a group of people who do know.
Yeah.
And they are rate shoppers. They go from bank to bank, checking different rates. And this is how they move their money. This is how people live.
So money should be moving.
Yes, and money should be making you more money.
Got it.
It should be making you more money. Very wise man once said to me that when you spend money, it should go from the right pocket to the left pocket.
Okay.
Meaning, some form or another, it's still connected to you.
Okay.
Even with business, when you do business with businesses that are going to somehow come back to you full circle.
Okay.
Either that business is in your community, that business is supporting someone that's in your family, it's supporting someone that you know who's now going to come back and do business with you. That's why community banking is so important.
Okay.
Because we're in the community, we see the need, we're definitely stakeholders, we want to generate more income for the community. So when the more customers bank there, the more funds that they get, the more opportunities the bank can provide to the community.
Okay.
So meaning donations, charity, time, just efforts. So having those relationships with your banker, that's when they're going to start having those conversations.
Okay.
It's not just pull through the drive-through, make your deposit, get your receipt, pull off.
Which is what it has pretty much turned. I mean, like you said, with the digital.
Oh.
I mean, some people, it's like,
Never
when's the last
step
time
foot.
yeah.
And so random, Markham is actually a very, very busy branch. Like, we typically get anywhere between 20 to 35 customers per day.
Okay.
Physically in the door. And that is like unheard of for some people because you do have mobile apps. Now, while we do have a heavy audience that does online banking, literally opened their account online, did everything, we've never met them. And but that limits your access and what you can do because you can only do digital things. Being in a community like Markham, the culture there is very old-fashioned.
Okay.
They physically like to come into the bank. Yes.
They want to touch their money.
They want to see, they want to know Courtney is the banker girl and she's at that bank and she's still there. And we just recently went paperless for deposit tickets and withdrawals and things like that. And I mean, it has been an adjustment.
I can imagine.
Yeah, it has been. They're like, wait a minute, I want a ticket. For what? And so you still get a statement, a printout with everything, but just as time is changing and things like that, cutting out those pieces of paper saves the bank money, which now in turn, we don't charge overdraft fees.
Okay.
Everything is a give. You gotta pay attention to what your bank is doing and what they're giving you, and that'll help too when it comes to saving and having a small entry level job. Something as simple as no ATM fees is huge.
Yeah.
If you have people who typically use the ATM 2 to 4 times a week, those fees can rank up to about $15.
And that's a lot.
$15 times 4, that's $60 a month. So, and that's $60 that could be going towards your savings.
Insurance. Or
insurance. Yes. Groceries.
Right.
So that, always be mindful of what are the things you're paying for that you don't necessarily need to pay for. That would be one of them. Or paying fees to have a bank account. If it's $10 a month, that's $120 a year. Again, that could go toward insurance or something else, a very, something that has a nominal fee, you know? So you just think like, and the saddest part is the community that has the least amount of money,
You spend the most.
it uses it the most disposable.
Yeah. Yep.
It's so disposable.
Yeah.
Yes. So you think like, no, this is the community that needs to be holding on to every dollar. And that just isn't the case. That making sure, what am I spending money on? One of the first things, whenever I speak to people about financial literacy, one of the first assignments I give them is log your spending for 7 days.
Okay.
Track everything that you did for 7 days. And then let's review it. What's necessary? What are you doing? Because that'll tell you, where did my money go?
It's so funny you said that, because I'm at this point now, because I don't drive, I come to work, take the Metro and Uber from, to and from the station, which was fine. But when I'm looking at how much I'm paying per month, and my one coworker had been like, Courtney, I can take you to the train after work. But I'm like, nah, girl. So now the summer's coming, I want to take some trips. I'm like, the 200 and something I'm paying to go to the train station from work, because it's between $400 to $450 in Uber. Yes, I know. But I was like, if I can cut that in half with her giving me a ride to the train, I'm gonna do it.
Yeah, and if you gave her a nice little Starbucks gift card
and she
or
doesn't
something.
know it yet, but that's exactly.
Yeah, of course she's gonna say, "Oh no, you don't have to give me anything. You don't have to. There's no expectation." But you always want to be courteous to people and little stuff like that.
Yes.
So for you to sit and figure that out, I say this at most of the classes that I do. Simple 2 dinners a week for an average family of 4. The average meal is between $15 and $20. So you think 4 people, that's $80 a night, times 2 times a week, that's $160. Times 4 weeks, that's $640 a month.
That's a lot.
Times 12, $7,640 some dollars for the year. For 2 dinners per week. $7,600 is a nice vacation.
Yes.
Is a nice chunk of savings.
Yes.
At 4% interest. If you're constantly,
Or
doing
a car
that.
paid off, depending on how much you're.
A car paid off, insurance premiums is something else. And I know, like, I got rid of cable. That cable bill was $200 a month. And I just was like, oh my God. And I had it for so long. It was one of those things I was like, I'm not even watching the TV. Like, why am I spending this money? So I finally get rid of it. And I'm like, okay, great. That's going to be $2,400 additional in my savings. I have no idea where that money went.
Yes.
So every month I'm expecting to have this surplus of $200 and it's not there because something else is taking it. But it's good to sit down and figure that out, because if now you're not paying that $200, where is it going?
Right.
So little stuff like that. Subscriptions.
Yes.
Like now we live in the era of everything is a separate subscription.
Yes.
And although they're $5.99 and $7.99 and Netflix is now $20.99, that went from $7 to now it's $22 or something like that, just for streaming movies or TV. And so you just got to say, am I using this? Is it worth it? And we'll just be like, it's just $5.
Right.
That $5 isn't going to break me or make me no, but when you start to multiply it,
It adds up.
it does. So it does add up. So little stuff like that on an entry level, like finding out what's essential for me.
Okay.
And I know people are like, I don't want to just live an essential life. Like, I deserve to take a trip. I deserve to get new shoes. We do.
Yeah.
But you still have to be mindful about it.
You don't want to be homeless in your new shoes.
Yeah, that part.
Right.
That part there.
Yes.
And even if that's a huge thing too. If you are living with someone and you're living with them because of financial stability right now, do you think that the person that you're living with will take kindly to you coming in with bags every other day?
That part. It's like, where are your priorities? Unfortunately, we have to adjust to, this is just the economy we're living in. And yes, does it suck? Yeah, it does. It does. But we're here. So it's like, you have to, like you said, the essentials, what's important, your budget. One reason, I have a lot in, the Uber fees to and from the train station, but I don't have the overhead of a car.
And insurance.
And repairs. And because the last car I had was a luxury car, and I remember how much it cost when I needed brakes, when I needed tires. Like, it adds up. So, yeah.
It definitely does. And even just like gas and maintenance is very expensive. So that's another thing too. Gen Z is not interested in purchasing cars.
Yes.
That is why Uber will forever, the stock will forever go up with Uber, because my niece she just got a car and she's 25. She said she was going to take Uber forever. And so, people just feel like, oh, well, I could see if you lived in the city or something where you can move around a lot, or you can take the train or walk to work. Yeah, I could see it not being necessary for a car these days.
But out here, you absolutely
100%. Yeah. And even though we have suburban buses and things like that, still just being able to know that you're gonna, be on time for work and things like that, and with the weather, you want to it's a luxury. It doesn't seem like it's a luxury, but having a car is definitely a luxury.
It is. When I'm in the rain doing my grocery shopping, it is indeed.
It is definitely a luxury. And we were talking about just simple things with hair maintenance, not even luxury hairstylists or going to the salon every week or things like that. It's just simple maintenance, like just buying oils for your hair or things like that. Those are all the things that you have to budget in.
Okay.
I've had the privilege of going into the schools and working with junior achievers, and they do like the budget planning for the children. And when you start to tell them what the salaries are, and then you get to list and everything, those kids will eliminate everything from the list. They're like, oh no, I can do my own hair.
Yes.
No, I'm gonna live with my mom.
Right.
I'm gonna, I'm not having children. Right. That's the first one they take off their list. They are not interested in having children because this is a huge expense. And I'm like, I'm glad to see those type of programs available for the kids, because not having the reality is what sends people starting out in the red with these unrealistic goals or these unrealistic ideas of what it is to attain certain things. Even when going to college, I didn't realize, all I knew is I wanted to go to college. I hadn't factored in that going to college was going to put me in a $55,000 debt immediately. I was not privileged to that information. All I knew is you need to go to college so that you can get a good job, but not that when you get that job, you're going to already be in debt. So we live in a world now where kids have kind of figured that out, and they're like, let's see what other routes I can take, just little stuff like that. People saving for college was a big thing back in the day. You don't really hear a lot of people saving for college. Being in the bank, I don't have a lot of clients who are, this is a fund that I'm saving for my child's college, because the economy is so extreme.
They can't say.
They can't even fathom 15 years from now. We're in survival mode today.
Yeah.
And what do? Multiple streams of income.
Community living.
Cut back.
Yes.
What's essential?
Well, Stephanie, it's been so nice having you here with us today. For anyone interested, again, she is at the Wintrust Bank. She's at the Markham location. It is, you can tell them?
3120 West 159th Street, literally right on 159th and Kedzie.
Okay.
It's close to all the highways and stuff. Very, very nice location. So I would love to help or meet with anyone who needed any information or is looking to find a new bank. I would love the opportunity. This has been amazing.
Yes.
And I know we talked about so many things, but it's so easy when you open the financial can.
Yes.
There's so many pieces in there, and especially now, I want everyone to have all the knowledge or all the information.
Okay.
Because that's what it is. It is lack of information. The resources are there. It's just a lack of the information. And I know we're closing out, but even with lending, you know, like it's there. Resources are there. We talked about borrowing from your insurance policies. That's a resource that's there that because of lack of information, someone could, yes.
Yeah. Well, it sounds like we definitely need to bring you back on. Thank you for tuning in and have a wonderful day.